Question number 3H. MP Limited issued a new series of the bond on 1st of January 2016. These bonds were sold at par, that is rupees 1000, having a coupon rate of 10% per annum, and mature on 31st of December 2021. Coupon payments are made semi-annually, that is on 30th of June and on 31st of December each year. Assume that say you purchased an outstanding MP Limited bond on 1st of March 2019, where the going interest rate was 12%. You are required to compute what was the yield to maturity of MP Limited bond as on 1st of January 2016, and then the second part of the question is given. I want you to calculate the answer of the first question on your own. Friends, over here, the answer of the first part of the question is very simple. The answer is 10%. Simple. See, you can see that say the information is given to us. 1000 rupees is the face value. We have been provided with the information that MP Limited issued new series bond. The bonds were sold at par. Means issue price is 1000. You can see that say regarding redemption no information is given. So we can assume very well that the redemption will be also at face value. So if at all the issue price and redemption value are same, then the return will be equal to the rate of interest, that is 10% in this example. See friends, we have done an earlier example, question number 2a, in which you can see face value is 1000, redemption value is 1000, rate of interest and the required rate of return are same, then the price of the security is 1000. So here the question was that why the price of the security is at face value. It is equal to the face value. So at that point of time we had given a reason. If the redemption value is equal to the face value and so the rate of interest is equal to the investor's required rate of return, the price will be equal to the face value. Now this time redemption value is equal to the face value, the price is equal to the face value, then the return will be equal to the rate of interest. So here is the question friends at which you are required to do application of the concept. I hope that you are able to understand my point. Let's say you need to have the application of the concept that we understand. Okay? Write an answer. Answer of question number 3H. In the breakdown, return is equal to rate of interest that is 10%. Full stop. From examination point of view, the answer is over. Yet I am dictating certain additional points to you. Writing those points is voluntary, not compulsory. We can observe that face value, comma, redemption value and current price are same. Full stop. So definitely return equals to rate of interest. Full stop. Right on answer. Second part of the question. What amount you should pay to complete the transaction? Of that amount, how much should be accrued interest and how much would represent bond's basic value? That is the question. Okay. Now this second part of the question is important. Over here the question says like this. Assume that say you purchase an outstanding MP Limited bond on 1st of March 2019 when the going interest rate was 12%. For that, the question is what amount you should pay to complete the transaction. It means that say what would be the price that you would be ready to pay to buy the security. The question says further, of that amount, how much should be accrued interest and how much would represent bond's basic value. Then that answer is required to be divided into two parts. Which are those two parts? I just explained that to you. Everybody is requested to pay attention over here. Second part of the question. Listen to me carefully. Language of the question is given like this. 1st of January 2016 is the date on which the security is issued. So we understand that the 2017, 2018, 2019, 2020 and 2021. That is the way the security is issued for 5 years. So it is 17, 18, 19, 20 and 21. So these are the 5 years for which the security is issued. Further, it has been given to us like this, that say you are purchasing the security in between. On which date you are purchasing the security? 1st of March 2019. It means, friends, that these are the two dates. These are the 2 years which have already been expired. Now, if at all you purchase the security on 1st of March 2019, then in that case you are going to receive the interest for 30th of 30th of June 2019, 31st of December 2019, similarly 2 times in the year 2020 and 2 times for the year 2021. So for total 6 times you are going to receive the interest income. The important point over here is that say you are purchasing the security on this date. Most of the time the question is always asking us that say you are purchasing a security when the interest has just been paid. However, things are slightly different over here. So how to make the calculation of answer, that I am discussing with you. I am giving explanation of the question only once again. I am not doing answer. I am just giving explanation of the question. We have been given that the security has been issued on 1st of January 2016. It is going to be redeemed on 31st of December 2021. 17, 18, 19, 20 and 21. Okay, that is the way the 5 years. You can see that say this is the date on which it is going to be redeemed. Importantly, it has been given to us that the interest is paid semi-annually. So the interest must have been paid over here. Interest must have been paid over here. And after this, we are standing on 1st of March 2019. That is the date on which we are going to buy the security. So purchasing security at this point of time, we are going to receive the interest on 30th of June 2019 31st of December 2019. So in the year 2019 we are going to receive it for 2 times. 2020 we are going to receive for 2 times. 31st of December 2021 is a redemption. So even in the year 2021 we are going to receive it for 2 times. Whatever this amount that we are going to receive in future, all this will be discounted at this point of time in order to make the computation of the P0. The time which has been expired so far is irrelevant. The time period which is remaining is relevant. And it has been given to us, friends, that right now the required rate of return is 12%. So the cost of capital is given to us as 12%. Now, how we will make the calculation of answer, let us understand. Dear students, over here we will have slightly a different approach for doing answer. Let me do some calculation and then I am giving explanation to you that why do we do answer like this. Write an answer. Answer for the second question. I'll get a working note prepared from you and then I'll explain you that say why we have prepared that working note. Write on first point. In this question, comma, we have to compute price of security that investor is ready to pay on 1st of March 2019. Full stop. Second point, so far year 2016, 2017, and 2018 have been expired. Full stop. So friends, over here 1, 2 and 3 years expired so far. Full stop. We are concerned with remaining time period that is 2019 to 2021. Full stop. Working note number 1, calculation of P0, in bracket I am writing 1st of July 2019. Why 1st of July 2019? I just explained that to you in 2 minutes. I just want you to make this calculation. Let us see, let's say, how to make the calculation of answer. Friends, regarding the date, I am giving explanation in 2 minutes of time. Please just wait for 2 minutes. See, we are purchasing the security on 1st of July 2019. So what will happen? We will receive the interest on 31st of December 2019. That is for the first time. Then year 2020, we will receive interest for 2 times. Year 2021, In that we will receive interest for another 2 times. So total how many times we receive interest? Total we receive interest for 5 times. So I will be preparing the cash flow series for 5 years. So column number 1 is year 1 to year 5. I am writing the cash flow. What is the face value of the security? It is an amount of 1000. What is rate of interest? 10%. It is going to be received half yearly. So we understand that it is 50 rupees. Then last year we will receive 1000 rupees. It is discounted at the rate of what? We understand it's a 6%. So it is 12% into 1 by 2. So over here, one divided by 1.06. 1, 2, 3, 4, 5. 7473. Correct me if at all I am wrong. 1 minus 0.7473 divided by 0.06. So 4.2117. Present value. So in that case, what will happen? 50 into 4.2117. That comes to 210.59. Last year it is 747.30. That is the way the P0 will be found. 210.59 plus 747.30. So 957.89. Please write down answer. Now importantly understand friends how to make the further calculation of answer. Calculation of P0 on 1st of March 2019. See what happens at 31st of December 2019 onwards, whatever amount that investor is going to receive, all of them have been discounted to 1st of July 2019. So suppose the question would have been asked as what is the price on 1st of July, then the answer is ready with us. But that is not the case. The case is that you are purchasing the security on 1st of January. 1st of March. So we will, that is, make the computation like this. P0 as on 1st of March 2019 is equal to P0 on 1st of July 2019 plus interest income on 30th of June 2019. We will add both of them whole into PVIF at the rate of 4% for 1 year. That is the way we are required to write the answer. See what happens at, say, if at all we purchase the security on 1st of March 2019, can we say that we are also going to receive interest on 30th of June 2019? Yes. How much interest? 50 rupees. So 957.89 plus 1000 into 10% into 1 by 2. So this is what you are going to receive additionally over and above this present value. And we can add both of them. Why? Because there is no difference of the time value of money between both of them. Into PVIF at the rate of 4% for 1 year. Why it is like this? That is 0.9615. We know that the rate of interest for the entire year is 12%. So can we say that for 4 months? Why it is 4 months, friends? Starting from March to June. So it is March, April, May and June. It is how many months? 4 months. That is the reason I am taking over here 4%, 1 year. And with that, we are required to find the PC. Please write down answer. So we understand that 957.89 plus 50 into 0.9615. So we understand 957.89 plus 5050. So it is 1007.89 into 0.9615. So it is 969.08. That is the way we can compute the P0. Write down answer. Write down a note for the answer. First point. If an investor is purchasing security on 1st of March, comma, then investor will receive interest on 30th of June, rupees 50. Full stop. Further, amount to be received from 1st of July onwards have already been, from 31st of December onwards have already been discounted on 1st of July. Full stop. Second point, 30th of June and 1st of July are same dates. So adding both of them, comma, they are discounted to 1st of March. Third point, per annum rate of interest is 12%, comma, so for 4 months it is taken 4%, 12% divided by 12 into 4 for discounting. Full stop. Second part of the question, what amount you should pay to complete the transaction? So that we have calculated. Of that amount, how much should be for the accrued interest and how much would present the bond's basic value? So we understand it's the P0. This is very simple. 969.08. Now this value is basically divided into two parts. One is the for accrued interest, which we can very well understand at cities of 2 months. So 1000 into rate of interest 10% into 2 months. This 2 months that we understand is January and February 2019. So it is 100 divided by 6, that is 16.67. Because we understand that, of course, when you purchase a security, in between this, the two interest dates, okay, in between the two interest dates when you purchase, then in that case, one portion is for the accrued interest and another is the bond's basic value. And that is calculated as balancing figure. So 969.08 minus 16.67. So 952.41. That is 969.08 minus 16.61. Please write down answer. Thank you all of you.